Welcome to Illuminati Silver. We tell you the truth about silver. Today is Wednesday, the 26th of May, 2021, and we're looking at gold and silver, now having reached the figures we predicted yesterday, but have fallen back since. What's going on? Now, yesterday we produced a video entitled Gold $1,900 and Silver $28. We're next. And the day before, $28 silver very likely this week, and on Saturday, our Gold and Silver Weekly Update. And we've provided links to 3 of these below in case you haven't had an opportunity to listen to them. Now, while producing yesterday's video, we saw that gold was standing at $1,900 and silver at $28, and we suggested that both were likely to go higher, but not hugely, and that there was some particular impetus, more so for gold than silver, and we may very well see, though, a silver attempt a breakout nevertheless to 28.25, and if it can hold above that, then 28.50 was a potential, but if it couldn't, then it would languish somewhat. Well, earlier today we saw gold peak at $1,912, and silver did actually go to 28.25, although both have fallen back since, with gold now having dipped below 1900 at $18.94 and silver at $27.70. So both made an attempt to go higher, but could not sustain the gain. Now, looking at the technicals, the main trend is still up, and so is the minor trend. However, should gold fall below 1855, then the minor trend will change course. Like all so-called experts, whereas yesterday chartists were predicting 1950 gold and $30 silver, they're now casting comment that gold could, in fact, pull back to 1850. We can certainly see support at that level, and extremely strong support at 1800. However, we're not discounting, frankly, a rise back above 1900 if the economic data published tomorrow is weak. Otherwise, if it's strong, then we will see that 1850 prediction being fulfilled. Silver has taken a little bit more of a hit than gold, down now 1.1% compared with gold's down 0.25%. And it's resting above its day low of 27.63. Frankly, we're not too concerned. We've favoured gold very short term because the economic climate is still uncertain, but once the economy comes back, bouncing back hopefully or robustly, silver will come into its own. Now, whilst yesterday the US dollar was at its lowest closing level since 2018, as US long-term yields fell, it has strengthened a little today by 0.4, and the spot index is standing above that very important, psychologically important level of 90, and it's at 90.04. Equity markets in the US are very marginally positive, and very marginally negative in the UK and Europe. We really do have to wait for US economic data announcements tomorrow and Friday before we may even contemplate a major move in either direction from current levels. There is quite a lot of data to be announced, as we highlighted in our weekly update, which was published on Saturday. Now, some interesting market and political news. Amazon has agreed to buy MGM Film Studios for $8.45 billion, and the super rich are choosing Singapore, no less, as the world's safest haven. So, if you have billions in your bank account, you should be heading off for Singapore. UK Prime Minister Boris Johnson was savaged by his former chief advisor Dominic Cummings today, who told a House of Commons committee that in his view Johnson was not fit to be Prime Minister. And President Joe Biden has said that he has ordered the US intelligence community to redouble its effort to determine where the coronavirus came from after conflicting assessments of whether its origins are natural or a laboratory accident. So, as with yesterday's video, we shall wind this up here. If you're interested, we shall continue from here with an article from Bloomberg, which is giving us their assessment of today's financial roundup, and will include one or two points we ourselves have not mentioned. So before we go to that article, thank you so much for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. So let's go over to Bloomberg. Bloomberg article dated May 26 at 9 p.m. GMT +1. Small caps take the lead in broad stock rotation. Stocks tied to a broader economic reopening led gains on Wednesday amid easing concern the Federal Reserve would boost rates sooner than expected. The dollar climbed. Energy, retail and industrial shares in the S&P 500 advanced while technology companies retreated. The Russell 2000 index of small caps outperformed major US equity benchmarks. The Dow Jones Industrial Average, which made its debut 125 years ago, fluctuated throughout most of the session. Banks advanced after the chief executive officers from the largest lenders testified before Congress. Investors have been weighing prospects for an economic rebound against the threat of price pressures. While there are multiple factors that could prompt jitters as stocks trade near all-time highs, this week's reassurance from Fed officials has bolstered the market. As they look to damp concern, I think they mean dampen, that inflation would translate into a bond buying slowdown, interest rate volatility has tumbled. The market really today is hitting that sweet spot where macro fears are in decline and simultaneously microeconomic reality is improving, said Lawrence Creatura, a fund manager at PRS PCTV Capital LLC. Anything that indicates a less hot environment is positive because it means that the Fed can sit on their hands that much longer. The interesting phenomenon that's occurring simultaneously is that the consumer-facing companies are reporting sizzling results. For Craig W. Johnson, technical market strategist at Piper Sandler & Co., economic uncertainty and volatility could still remain high as traders await clarity on inflation trends and tapering prospects. Investors appear to be giving the Fed the benefit of the doubt with their transitory inflation forecast, but we suspect the window of confidence could close without supporting evidence in coming months, he said. Some other corporate highlights. Ford Motor Company surged on plans to increase spending on electric vehicles. Reddit favorites GameStop Corp and AMC Entertainment Holdings Inc. soared, delivering more losses to skeptics who have piled on bets against the two companies. And retailers Dick's Sporting Goods Inc. and Abercrombie & Fitch Co. climbed on better than estimated results. Nordstrom Inc. tumbled on disappointing margins. Here are some events this week. US initial jobless claims, GDP, durable goods and pending home sales on Thursday. Some of the main market moves. The S&P 500 up 0.2% as at 4 p.m. New York. Nasdaq 100 rose 0.3%. Dow Jones little changed. And the Russell 2000 index rose 2%. The Bloomberg dollar spot index rose 0.3%. Though it was a little bit higher when we looked at it. The euro fell 0.5% to $1.2192. The British pound fell 0.2% to $1.4123. If you recall, it was not that long ago when we were talking about $1.20 to the pound and possibly falling to $1.15 or even $1.10, with some doom gloomers predicting parity. And the Japanese yen fell 0.3% to 109.15 per dollar. The yield on 10-year treasuries advanced 2 basis points to 1.58. Germany's 10-year yield declined 4 basis points to minus 0.21. If I recall correctly, it declined yesterday too. And Britain's 10-year yield declined 3 basis points to 0.75%. West Texas Intermediate crude rose 0.1% to $66 a barrel, but gold futures were little changed. That's the end of the Bloomberg article, but before we go, there was another article just very, very quickly. Might as well worth reading this because it's about gold. It says, gold slips from 4-month high as treasury yields rebound. I'll read it briefly. Gold slipped from the highest in more than 4 months as bond yields rebounding, hurting demand for the non-interest bearing metal. The yield on 10-year treasuries advanced 2 basis points, while the dollar rose as well. A stronger greenback makes commodities, including gold, less appealing for investors holding other currencies. Bullion has been rallying from an early year slump, helped by central bank reassurances on the outlook for monetary policy and increasing holdings in exchange-traded products backed by the metal. Gold slides back under 1900 on a modest sell program, said Tai Wong, head of metals derivatives trading at BMO Capital Markets. That suggests profit-taking, helped by slightly higher yields post-auction and a higher dollar. Gold fell 0.2%, 1895, at 2:42 p.m. in New York, after rising as much as 0.7%. The precious metal is still up more than 7% this month, on course for its biggest gain since July. Futures for August delivery on the COMEX rose 0.2% to settle at 1903. Spot silver, platinum and palladium slipped. So all those boosting platinum and palladium recently, watch this space. The recent rally may not last, according to Giovanni Stonova, commodity analyst at UBS Group. We believe inflation will level off over the coming months and Fed officials to sound less dovish and look for higher nominal rates, he said. We expect gold to trend lower over the coming months. We're not so sure over the next couple of weeks, though. Let's wait and see. Thank you so much. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.